All right, good day, guys. Welcome back to another Not So Late Night show. I think this time around we will be talking about real estates, particularly REITs, real estate investment trust. So, if you are someone who has been investing in the stock market, and if you are someone who gravitates towards income investing or dividend investing, REITs is one of the so-called no-brainer categories that you would actually would spend time and effort and even have it in your portfolio. And why would that be the reason, Juming?
Actually, for me, REIT is a very good opportunity for you to become a landlord if you cannot afford to pay up a lot of deposits, down payments. This is a very good option. And of course, why is good for dividend investing is because majority of the earnings they will actually give out in the form of distribution back to investors or the unit holders. So that's why it's kind of predictable, unless like COVID, then they cannot collect rental, then of course the unit holder also cannot get the distributions. So I think this is a very good way for you to start investment, not so complex, something that you can understand. You become the landlord, but someone manage on behalf of you multiple properties, and then at the end of the day, the return from the renters may in the major parts will give you the distributions. But today's I think
in a way is purely passive investing. So if you become a landlord of individual private property, you still need to manage the property yourself. You still need to tend to repairs, or arrange for people, foremen, and electricians to go and repair the house whenever your tenant complains it to you. So yeah, if you really want passive investing, REITs is actually one of the best form of options to actually let you enjoy that kind of hassle-free kind of investment, right? So yeah, what's today's topic all about, Junbing?
Yeah, I think today is an interesting angle.
Okay.
The favorite one, the fight between Singapore and Malaysia. Today is not about fighting about goods, not fighting about currencies, not talking about politics, but today's we want to do a deep dive by comparing the REIT in Singapore and also the REIT in Malaysia. And then we have our own point of view, and then we are eager to share it with you on why we think certain country is actually having a very clear advantage. Maybe Japan, you wanted to start with your sharing?
I think if it's all about all about food, I think it would be a tough battle, right? Of course.
No. I think Malaysia is having a better food. This one is.
But I think when it comes to REITs, on a serious note, sad to say that even though you might be a very patriotic Malaysian, but if you look back at the REITs available in Malaysia and compare it with the REITs available in Singapore, stark difference in a very huge spectrum. Meaning to say that if you talk about the choices out there, right? In Singapore, as of latest, we have 44 REITs listed on the Singapore Stock Exchange. And out of these 44, not all of them are REITs having properties in Singapore, right? There are REITs purely having properties in Europe, like Cromwell, right? They choose to actually get public or get listed on the stock market on the Singapore Stock Exchange. Then you also have REITs like ARA, US Hospitality. So it's a hotel REIT. So it's a REIT, particularly in the hotels. All their hotels are actually in US, right? But they choose to actually go IPO and become public in the Singapore market. So this kind of situation will continue to evolve and continue to more and more REITs will actually seek to list on SGX because of the favorable regulation and also the taxation structure. Whereas on Malaysia side, out of the 18 REITs, I think only one REIT, which is YTR Hospitality REIT, have properties outside of Malaysia. Meaning to say that if Malaysia economy and also the Malaysia real property does not grow for whatever reasons, your investments in a Malaysia REIT will also face this kind of sell down, or even this kind of I would say roadblock ahead. So I think we have a graph of the historical returns. These are basically the so-called, we took a handful of Singapore REITs and compare it against a handful of Malaysia REITs, right? These are, well-known, famous Singapore REITs, and we plot, or we use TradingView to actually tabulate out the historical returns of these Singapore REITs and also the Malaysia REITs, right? So we have IGB REIT, right? Very well-known retail REIT in Malaysia. You also have Ascendas REIT, Axis Real Estate Trust, Sunway REIT, Mapletree Commercial Trust, Keep REIT, and also I think the last one would be, if not mistaken, would be Parkway Life REIT, right? The hospital REIT, even though owned by IHH, but they also choose to go public on the Singapore Stock Exchange. So you can see, to give you guys a brief, walk through how the so-called historical returns actually pan out. The red line is actually Mapletree Industrial REIT, so it's a Singapore REIT. The purple line is actually Mapletree Commercial Trust, which is also a Singapore REIT. The one in I would say Tiffany color, so something like a greenish blue, is actually your Parkway Life REIT, so it's also a Singapore REIT. Only the fourth highest performer, which is a Malaysian REIT, you can actually see the Malaysian Axis REIT, right? And then if you go through the light blue REIT, it's actually Ascendas. The darker purple REIT is actually Sunway REIT, and then at the bottom you only find your IGP REIT and also your KIP REIT, right? You might say that, okay, Jupan, maybe this is just a 10-year historical return, inclusive of dividends and also capital gains. But what if for the past 5 years, how have Malaysia REIT and also Singapore REIT have provided in terms of returns? So you can see, if I were to just zoom back for the latest 5 years, the result will be even much more clearer. You can see the top part is actually dominated by all the Singapore REITs, right? Mapletree Industrial Trust coming in at 120+% 5-year return, Parkway Life REIT at 99%, Ascendas REIT at 78%, Mapletree Commercial Trust at 66.88%. Axis REIT is only at 44.76%, and it is already the best performer in terms of comparison with the other Malaysian REITs, IGP, KIP REIT, Sunway REIT. And we'll notice the difference between Mapletree Commercial Trust and Axis REIT. There's a huge difference in between. Meaning to say, in terms of percentage-wise, Mapletree Commercial Trust, even though they are, coming in at the lower 5-year return against Mapletree Industrial, but they actually beat Axis REIT in terms of their overall returns by more than 50%. So by putting your money into a Singapore REIT, even though if you bought into Mapletree Commercial Trust, you're actually going to perform 50% better than putting into the Malaysia's best performing REIT, which is Axis REIT. So from the data itself, it's quite clear cut that it's quite inherent that putting your money onto a Singapore REIT will actually generate you much more return, not only on a historical basis, but moving forward. Because at the end of the day, you're going to realize that the Singapore Stock Exchange will attract more and more REITs to IPO, and we are spoiled for choice and quality over here. And the Malaysia economy, if you are bullish on it on the long term only, there will be a thesis to invest in the Malaysia REIT. But if in the short to mid term, there are going to be some sort of uncertainties going there, then it will also drag down your overall Malaysia REIT performance. But I don't know, what do you think about that, Chun Peng? Am I a little bit biased because I'm staying over here in Singapore for a period of time already? Or what is your perspective as a Malaysia investor and looking at both Singapore and Malaysia REITs?
I think, of course, if you look into the field angle, in terms of choice, in terms of the diversification of the portfolio, whether only focusing in Malaysia or is across the world, and also most importantly, the performance itself, be it on a 5-year or 10-year basis, I think Singapore REIT is the clear winner. But then, if you take a step back, for most of the Malaysian, if they buy this theory, they found out actually putting the money in Malaysia REITs is not a wise choice. I think it's a bit hard for a normal Malaysians to study Singapore REITs. because first of all, it's a lot, and then it may sound very foreign to you. Maybe for you, like Mapletree is one of the popular one, but then for us, we don't know about that. We only know about IGP, know about some REITs because it's the one closer to our life. So it's a bit hard to start. If you can summarize, I mean, from a few angles, maybe it will be very helpful for the people that's watching, I mean, or listening to these videos or podcasts.
Yeah. I think one of the so-called angle you can even dive into or help you kickstart to make things interesting. Of course, the best part would actually to reignite the economy, since that you can now travel without quarantine, and if you want to actually choose a place for vacation, if you're in Malaysia, you can just come over to Singapore and go through the streets in Orchard, or even take a trip to Sentosa Island. And whenever you pass by Sentosa Island, there will be a mall over there, which is VivoCity Mall. So hook or by crook, if you go to Sentosa Island by public transport, you would always pass through VivoCity. So VivoCity is a mall which is under Mapletree Commercial Trust. And to summarize what VivoCity is basically just like our Mid-Valley City Mega Mall. So a lot of footfall catchment, a lot of people will actually go to the mall. It will be as crowded as Mid-Valley Mega Mall on the weekends. And the thing is that even though it's a more similar to Mid-Valley, but they also have certain boutiques over there, like Hourglass, those kind of luxury watches. They also have their stores over there. So I would say it's a hybrid between Mid-Valley and also the Garden City combined together in just under one mall. Right. And if you want to relate again, other REITs, for example, like Sunway REITs, right? They also have quite a number of so-called, I would say, diversified portfolio. The thing about diversification over here in Singapore is that recently, I think most of the so-called retail REIT and also the commercial REIT, they have undergone a little bit of, I would say, combination. So basically, they wanted to become bigger, grow bigger. So even though Sunway REIT, they are already doing that, they have a diversified portfolio under their properties. But over here in Singapore, you can see that what is going on is that the retail REIT under the same sponsor, let's say for example Mapletree Commercial, they are actually going to merge with Mapletree North Asia, which is another sister REIT, also holding on to commercial and retail properties, but they are based in China. So how would that actually come into play would also be an exciting learning curve if you want to invest into a Singapore REIT as well. So I think that's how you would want to get started. But the easiest way is actually to come to Singapore, go to the malls, and then try to relate what kind of atmosphere and what kind of vibes the malls are giving to you, whether how you can relate it back to a Malaysian mall, and how are the so-called footfall traffic actually better, worse, or similar to the malls that you're actually going in Singapore, Malaysia, and then try to study deeper from there and come up with an investment thesis before you kickstart your Singapore REIT journey, right? By actually experiencing it firsthand kind of information and also experience. Yeah. So are you coming over to Singapore anytime soon to, experience Singapore REITs on yourself?
Not anytime soon. So I think it's a bit hard to travel abroad. But of course, if you guys wanted to find out more in a more condensed manner, I think upcoming we'll have our thematic transcript session. It's basically a session that we focus into one theme or one focus area. In this, the upcoming one will be focusing in REITs, and we'll cover the REIT from both Malaysia and also Singapore. Beside the REIT that you can relate, like retail REITs, your commercial or the office REIT, your industry REITs. Singapore also got a lot of data center REITs.
Yeah, we have 3 right now, or 4 right now.
Which is something that you can't really get in Malaysia. And then, of course, how to build it, from the historical performance perspective, what is the latest progress? We will put all this in a condensed section within a day.
Okay.
So if you are interested to find out more, all these things will be in the descriptions. Just check
Yeah.
them out. Of course, if you subscribe to our premium clubs, then all this you can attend as a complimentary sessions. Yeah, I think I will have one last thing to actually throw to Jupans and also for him to share is if for Malaysian to start to do, if they're interested to invest in Singapore REITs, I think first question is how, what kind of tool they can use. Secondly, is there any tax impact which we should take note or not?
Okay. I think with the so-called latest rollout, there are plenty of internet brokers available, and I think in terms of fund remittance, it shouldn't be a big problem. I think we will share more also in our REIT Raids session on how to get excited Malaysians to kickstart their investment journey into Singapore REITs. Very straightforward. We actually include the so-called fund remittance and also setting up an account. And of course, in terms of tax, I think there's also one winning point that Singapore REITs actually have, even compared to Malaysia. So you know that the so-called distributions, right, that Malaysia REITs actually announce, what they announce, you don't get 100% of it. So meaning to say that IGB REIT, once they announce a distribution of, let's say, 10 cents per unit. So if you have, let's say, for example, 500 units, logically, you would take that 10 cents and times with 500 units, and you think that you're getting 50 ringgit in terms of distribution, right? But when you check out your bank account, it's actually lesser than that because you need to pay a 10% withholding tax for every distribution you are entitled or before you actually get it deposited to your bank account. So actually, they will help you to pay off the 10%. But when you invest into a Singapore REIT, what you see is what you get. If a Singapore REIT announces a 50-cent distribution per unit and you have 100 units of that particular REIT, basically you're going to get 100 times 50 cents, which is very straightforward, right? $50, right? So no withholding tax, even though you are an alien, even though you're not a Singaporean tax resident, due to the favorable tax structure, you see what you get. Or in Malaysia, you still need to pay a 10% withholding tax. So I would say pretty much worthwhile to consider to invest in Singapore REITs due to this and also the variety of choices and quality that you have out here. So I think that answers your question, Juming.
Yep. If I've nothing much to add, basically this is what we are planning to share from different angle on why Singapore REIT is a better choice. But if you are facing difficulties on how to start, what tools to use, you can always put it in the comment or message us, and then we'll try our best to actually get back to you.
Right. And of course, do like, subscribe, and also share this video to your friends and family. Let them know that, there are better choices for you to compound your dividends and also your distributions by considering Singapore REITs. But that's just our perspective. Let us know in the comments as well if you think that Malaysia REITs can actually outperform in the next coming few years. But that's about it for today. I hope you enjoy and get, your eyes open that Singapore REITs are so much better compared to Malaysia REITs. We'll see you in the next episode. Let us know also what topic you want us to cover, and we'll see you in the next one. Take care. Bye-bye.